friends, welcome to the show. My name is Rocky Outcrop and this is Bitcoin Technical Analysis. Thank you so much for joining me. And we're going to have a really positive day today, I think. We're going to talk about things and be upbeat, and that's all good. So let's just dive straight into the charts and be positive about what we're seeing. Okie dokie, let's do it. This is the Bitstamp 24-hour chart that I have up behind me. In the past, you can see we had this head and shoulders, which saw the prices drop down all the way down to this area here, around about that $10,000 mark. Of course, we had wicks that went down sub 10,000, but we didn't actually manage to open or close a candle really below that 10,000 mark over the last wee while. That's positive for the price action, and it's a healthy enough retrace so far. What we've actually then ended up having is this descending triangle. If I just kind of quickly sort of annotate this for us, then we have this sort of this descending triangle, which has then actually managed to then break out of this shape up here towards its full measured move, and it's done that, and that's also very positive for the price action. And we currently find the prices at $10,920. So that's all very, very good as well. Isn't it great to be upbeat and positive? This is great, going along great so far. Let's dive over to the CME charts and zoom on in and see where that means that prices have come so far with regards to their body closes as well. And so far we're just up here at the 382 Fibonacci retracement, from the retracement down from the head of that head and shoulders down to the measured move off the bottom of that. And we know we could still be looking then towards targets up above us of 11,230, where we have the 50% mark, and this golden pocket coming in here, 11,560 up to 11,650 on the CME charts, which would put the prices in terms of the spot prices perhaps up and around about this in this zone here. Perhaps we have this fuzzy line up above us, and perhaps even beyond up to one of these other targets. Now, where is this fuzzy line here? Just looking over to the left, you can see it's marked in with respect to the previous support and resistance zones that we've had on the charts. Not just this area in here where we have the neckline, more or less, of that head and shoulders. And then of course this, in terms of where the wicks went down to and part of the head structure, and where the bodies were on the shoulders structure, sure, you could maybe say that it was the necklines there at 11,200, and then the next line up at 11,500, matching in with both of those sorts of targets there with the 50% and the 618 golden pocket. So that's all good, and if we were to go up above then maybe we'd be looking at kind of breaking the downward structure that we have here, and perhaps coming in and putting in a high which is higher than one of our our previous lows over here on the spot prices in terms of this head and shoulders area. So if we were to come up here and close up above 11,500, that'd be very positive for the price action, having managed to sort of throw off the shackles of this downward trend to a greater extent than just simply by going up higher than the chunk that we have here. Of course, that would all be very, very positive. And why am I being so positive today? Well, I just think that it's always worth reminding folk that you know, trading can be quite a solitary thing, okay? And watching YouTube's videos as well, and my experience is often a sort of one-to-one experience where you, the viewer, is watching me, the presenter, and you don't really have much interaction outside of that. And I just wanted to then say, hey, you know, thank you so much for being my friend to everybody, because I genuinely mean that. And I've got such a big heart, you know, full of so much love for everybody that's joined up to be a subscriber on this channel. And I really, really, really do appreciate it. And the same goes out to everybody, of course, in the Discord or on Twitter or anywhere else. Because you know, for me, this is a relatively isolation, you know, it's a fairly sort of lonely experience it can be, and just having you all as friends is a really fantastic thing. So I'm really, really, really glad as well if you have come along to this channel and decided to invite me into your life and to spend some of your time that you have during the day with me here looking at the Bitcoin charts. I really, really do appreciate that, and it's great that we can have that sort of interaction, if you like, even though it is of course limited compared to if we were face to face. That we have that between us, and I really do appreciate it. And it's good to know that I've got all these friends out there, and I'm your friend, and it's a two-way thing like that. So thank you so much. Okay, so that's why I'm being really positive today. But Having said all that, there are a few kind of negative things that we could look to as well. But I'll keep going with the positivity for now. And one way of doing that is looking at this RSI downward trend that we had drawn on the charts for a wee while here, and saying that, hey, look, we were talking about this yesterday. Would we be able to push on past this zone, or will we see us getting resisted at this area where we have this orange horizontal line kind of giving us an idea of where we've got sort of a significant swing area for us, coming in and interacting with this red line for the downward sloping trend line? And would we be able to bust above that? And we have done, and it's changed the moving average to being a positive slope on this now, as I've got it, programmed in here to show blue, and it's got a positive upward slope on it. So that's good. Right, that's good. Okay, and what else is positive is that we've come in here and we're coming closer. Well, that's maybe not strictly speaking true, as these seem to be kind of moving parallel to each other down the ways slightly, but we've come closer to crossing over on the DMI and getting that positive trend happening. And if it did happen, we're still got this above 20, the ADX. It's just come down below 25. We still have it above 20. So this zone here between, 25 there and the 20 I've got marked out with that serrated line in the background, that's a positive area to see the prices at, to the ADX above this zone if we were to get a crossover. Okay, so that's all very positive. Other positive things that we can look at is that we're come up here and we're trying at the neutral line just now on the stochastics, and this is quite a good thing, pointing towards the top side, very much, in an upward direction currently with those. We haven't ticked over, and we've got a green day on the candle today as well, of course, and that's positive. And as well on the RSI, we've moved up above the neutral line as well. Okie dokie. So, right, that's all good. And what could we maybe say as well? Well, that'll do for now, right? That'll do for now in terms of the positivity, right? Now let's just kind of also be realistic and that too. And I think it's also useful just bearing in mind that that for everybody, we all have ups and downs in life, and and the price action itself is no different. And that while we have been feeling good, over the last few days, and that's very positive, that there are dangers. It's always worth bearing in mind what they could be, so they don't come, and trip us up unaware. So forewarned is forearmed. It took me a while to remember that sentence. We normally kind of point at my forearm and everything. So let's have a little bit of that. Now, if the RSI were to turn around at some point here and come back down and retest this area, we can still remain fairly positive on it. But if it did break down below this sort of swing point here on the RSI, that would be something to look out for, I do think, as well. You could also then say that perhaps this was always just a sort of broadening wedge structure, and we've not really broken that properly yet from these two highs here and this two. If we were to then just simply go back down the way, things could look, kind of like they were broadening out as they had been, sort of, so to speak, just there. But we do know that while we broke it towards the downside, we found support in here at the bearish control zone, moved back up after testing that zone, and then came up towards the top side. So we can be aware of how the picture of this, is all I'm really trying to get at, could change despite its current positivity. We know that as well in neutral line is a common place for this to get kind of turned around at, and that we could see this happen as we have kind of here and here, in here, just with the interaction at the middle of this thing. Now that we have kind of reverted in a sense to the mean, and we've done enough of that sort of a work. So that's something to be aware of. We also can be aware of the fact that this is also potentially just going to expand away from each other. And if that happened, then the ADX is sat there positioned in order to give us this could be a very good bearish opportunity for the market. Of course, they're a negative thing if you want to think about it like that. If this were to happen, because we have the ADX still in a position where that would be strong and show a kind of rejection from this move. We've only really come as high as having the measured move off the back of the descending triangle and not pushed on past that yet. So we don't really have a great deal of follow through to talk about. And if we go down towards the smaller time frames, or perhaps over to another chart where I've already got it charted out for us, yes, we can see that this idea, this concept of the ascending, broadening wedge is still more or less in play for us. If we were to have drawn in a trend lines coming in from these bodies at the bottom here, going along past all these bodies here, So that's the lower side of this trend line going towards the top side there. And then if we draw this in with the bodies going along the upper side, we can see that these two are actually expanding and diverging away from each other. And that is an ascending broadening wedge, which is of course actually a bearish pattern that could spell continuation from the previous downward trend. Okay, so that's your sort of your negativity on that sense, as we see in terms of other things like the DMI having come up above 30 and now it's got moved back down, it's below the ADX, and we could maybe see if this were to start turning around, that might be an earlier sign for us. Having had a positive crossover there on the 14th of September with the ADX up above the 20, on the 14th of September here, we saw this rise up towards the top side, bringing prices from, the 10,000, mid 10,000 area up towards closer to that 11,000 area, giving a nice price movement up the way. So we have had this, in effect, do as much as it kind of needs to do, but it's showing us that there's that strength towards the top side. There's a couple of little warning signs like this top here that we've got at the minute coming in here is potentially sort of bearishly divergent compared to this one here. If we just make a couple of quick comparisons on, say, the MACD and the Stochastics, let's just verify that with the Stochastics. Well, it could end up being so. It's premature to say so at the minute with this movement, but this the MACD that's showing us as we have that sort of wedge formation on the charts themselves. And as well, I suppose you could also look towards whether or not this high is going to turn out to be bearishly divergent to the most recent of highs if you look at across the board of all of these oscillators. So maybe there's that. And if we go down towards the lower time frames, then how does that smaller picture that we're talking at the end there translate? And we can see between the highs at 10,960 and where we are just now, which isn't quite as high as it. We've got this lower action on the oscillators down below, potentially giving us a question about how this is going to shape up. But we could still have towards the upside, topside potential that could actually then see these oscillators as it just ticks there up a little bit on the screen as I just expanded this out to be full screen. Just if this were to kind of stretch back around away and go towards the top side, maybe we get that positivity instead of having this sort of maybe downward structure here with the RSI and the oscillators below kind of representing that, as we have that sort of waning of the momentum towards the top side over the period of just the last day or so. While, like I say though, in context, of course, this has been a green day and is positive towards the top side. Now, if we do see resistance there at the 382 areas, the 0.382 Fibonacci retracement, then perhaps we would be going back down and looking to try and find support in around this 236 area. We can consider that to be sort of the fake out zone of that broadening wedge just for now, just really in this area. If we were to come into this zone, then we wouldn't need to get too excited necessarily about things. But this could be, movement zone beyond there could spell it going down towards the 9,600 area. So that gives you an easy enough area to manage your risk at, and to, of course, take profits at as well, should you find yourself in a positive position. So yes, of course, the positivity. And what if I just dive down to the 1 hour time frame? Are there any gaps here we need to be aware of? And there aren't. The last gap was over here. We filled that in already on this time frame. Let's see then what else we can look to. Let's go up past the daily time frame and look towards the 2-day and see if we can see any sort of this of those questions being answered or not. And while we had the that we have on the lower time frames, while we had the DMI here positioned and with the potential for it to kind of cross over in a positive way on, if I go down to the 24-hour time frame, as it has the potential just here to cross over positively with the ADX above that zone. What we have here is they've stayed positive, since the rise is back up, since it crossed actually all the way back there in April. We've had this in a positive stance, while there has been times when the upward trend has faded off, as we can see in this chunk here. But we have had these movements towards the top side, and that's all been good. And it's saved itself from crossing just here at the lows there when we could have filled in that CME gap, but we didn't. So it's saved that from happening. And, we've come down here, we spent a wee tiny little bit of time as being oversold, back in here at these lows as well. So now we've moved outside of that zone. That's kind of positive too, crossed above the moving average. And we've also kind of come back up here above the neutral line, and that sort of swing area for us at the neutral area on the 2-day on the RSI. But it's, of course, still got its negative average, and it could turn around the next day or two. We could see this crossover. It could be more positive for the medium term. or it could not. And if it doesn't, then of course we know what areas to look to, and they can really be summed up with that fake out zone and the 10,495, 382 or 236 Fibonacci area that I spoke about already. And of course, just as generally speaking, this lower broadening wedge line, it's only got 2 touches, so it's not amazing. But if it did come down and do a third one and got a bounce at that point, you maybe were looking down to $300 movement towards the downside. As we've been speaking here, the prices have gone up to 10,950 on the CME charts. And that is positive because we're seeing them as contangled versus the spot prices. As the spot prices themselves, when we started speaking, were actually positioned slightly higher than the CME prices, looking like backwardation. And that, of course, would be a negative thing. We want to see this remain contangled if possible, but really, actually, we can say that they're just operating in parity, and that's more of a neutral thing, really, overall, in terms of that currently for us. And we are still looking with the potential for downward movements down towards the lower side. And of course, we've got easy to manage areas in terms of risk. As you can see, this parallel channel we drew in on yesterday's episode showing us very much where the highs have been coming in at. And so far, we've not actually managed to really push on past that. We did close above the 9850 areas that we were talking about over the last few days, the last couple of days, just go up to 24-hour time frame and say, well, over here in yesterday's video period of time, we're saying that close above closing up above that 9750 really area, or 10,750 or 10,800 area, is going to be very positive for us. And we've done good enough with that sense that we've got up here and we're finding ourselves really having got support in around 10,800 and pushing on past that just now. But there are a couple of little sort of dangers for us, a couple of them that can kind of like maybe be clearer, just like we said on the 1 hour time frame between these last 2 highs as well, where we have that kind of potential for divergence just here. Will we see prices drop off and have to test down towards the 10,700 area or so, perhaps even come down towards this lower end of this broadening wedge? If we did that on these lower time frames, we're putting in a lower low compared to these areas over here, and you'd be looking at this and saying, well, maybe this was a bit of, the downward trend maybe in terms of the RSI is really quite apparent there. Just looking at across the whole of this thing and saying that, well, look, from these highs over here to the most recent of highs, we've got this clear downward structure, whereas over here in the price action we've got that clear upward structure, and maybe that there is kind of that divergence that you'd be looking for if you were to see things turn around just here at this sort of lower term time frames. Okay, so maybe there's that negativity too, but we've got some other things that we can kind of just fall back on. We're in terms of being positive, we're above that 10,500 area. We know that that's important. As I spoke about with the lines here, where was the first chart I was looking at? Is it just not visible on those time frames? Yeah. So this moving up towards these zones here, that where those fuzzy lines were, it's a different point I was trying to make there, is obviously positive for all the reasons I said earlier on. But the prices having come down here and closed their weekly bodies out above that 10K area, see that we're still above the A point of our Gartley in the past, and we've and at the February highs, and that we're still hanging in there in terms of saying that, look, we had all this positivity, everybody felt very positive about the price action over here. Then in general, we spoke about it, and then we've come up to where we are here now. Just move this out the way. We've come up here, and that's obviously then we're still above those positive areas with the chance then of kind of going on and continuing on the way. In terms of the monthly candle, yes, we do have a red monthly candle here, and this is obviously looking fairly kind of sort of like we've got potential for a further retrace down the way to perhaps this blue horizontal line we have showing up here still remains visible, while all the other horizontals are kind of just ditched. And above our heads we have that resistance line there as well at 11,600, and that's really kind of going to be the broader term structure of where we're looking to in terms of if we can move past these things or not, in terms of really getting properly positive, or indeed remaining not fully positive quite as yet in terms of the dangers that are lurking below us, such as these gaps, this defined here with these 2 blue lines, and then several gaps just down below which are on the smaller time frames for us to be aware of. And that's going to do for today's episode. But remember as well, be positive, okay? This is a direct message to you, right into your ears, to say that I really do appreciate you tuning in for to this show, and that your interaction here just by watching this is great. It helps with my sort of self-esteem and my mental health, and that's really good. And you can do far worse than having a positive and friendly atmosphere in your life than what these videos do. So maybe you might want to come back for more if you're just new to the channel and you want to hit that subscribe button. That'd be super appreciated. Also, what I'll finish off by saying is that I'm still running that giveaway. Just need to have enough people enter it, to make it really worthwhile. But we're going to do at least, 10 Satoshis for every view that the channel gets this month. Just checking in with how that's looking at the minute. Obviously, these figures take a while to update. So over the weekend they drop off a bit. We're at 20,877 views. It's potential for us to end the month with 30,000 views and be giving away 300,000 Satoshis or something to somebody who enters the competition. Whatever, we'll take a look back at that whenever the time comes for it. I just want to say thank you so much to everybody for tuning in yet again, and I really wish you all the best out there in your endeavours. Okay, so catch you next time. Thanks so much for tuning in.